Hello and welcome once again to my channel. And in this video, I'll be explaining how to identify an high probability trade setup, or what some other people will call A plus setup. Because it is not all setup that you see on the charts that are profitable. And that is why many people blow their accounts easily, because they cannot identify high probability setups. Because when you are trading high probability setup, that is when your win rate will be increased. And I'm doing this video because of the high demand, on how to identify the high probability trade setup. And I'll be explaining this using 4 key points. And I would like you to watch this video to the end, because after mentioning these key points, I'm going to explain them in details. Now, what are these key points? Number one is, for you to be able to identify high probability trade setup, you need to know the trend direction. Then secondly, you need to know your key levels, because it is at those key levels that you'll be picking your trade. Then thirdly, you need to know how strong those levels are. Then number 4, you need to watch the reaction of price at those levels. Then number 5, you need to look at the risk reward of that particular trade setup you're about to take. So when you put all these 5 key rules in the consideration while picking your trade setup, then you'll be able to pick a high probability trade setup, the trade setup that will increase your win rates. Now, let me explain them one after the other. So how do you know the direction of the trend? Because it's very important that you know the direction of the trend. So now, like here now, we are in a downtrend from here. We are in an uptrend here. This is our last high, this is our last low. But on getting to this place, there is a shift. This is expected to be a retracement back to this place or to this place. But at this point, we have a shift towards the downside. And also the support and resistance here was broken. So since we have a broken support and resistance here, that has approved this particular trend to be a downtrend. The trend is changing gradually. We are in an uptrend before, but now we're looking at downtrend now, because there's a shift in structure from uptrend to downtrend, from here and from here, because this particular support and resistance is now broken. So that means what we'll be looking at here is retracements for us to know to the levels where we'll be picking our trade. And that will take me to levels now, how to know your key levels, where to pick your trades. So now the first thing that you do is you look at why this price is coming down, is creating levels, your key levels for you to watch. And these are the key levels that the price is creating here that will cause supply. When price is coming down, is on a downtrend, is creating supply levels for you. And when price retrace back to that supply, that is where you pick your trade. So we have these supplies here, and we have this supply here, we have this supply here. So now, how do you know which of these supply to trade? Remember, the first thing I talk about is trend. Okay, now we say there is a shift of trend here. A shift in trend here towards the downside. That means we need to be looking for sell opportunity now. Now, the second thing that we need to look at for is at what level, at what point will I place my sell positions? Then you need to do that at your key levels. And this is the first key level. This is the second one that we are watching here, because these are the supply levels that the price was creating on this downtrend here. Now, it is when the price gets back to these supplies that we are expected to take our sales, from this supply. Now, does it mean that you cannot buy from this place down to up to this supply, yes, you can buy. If you see a buy opportunity, a buy confirmation, you can buy to this place. But your buy from here should not exceed this place. This is where you come out, because at this particular level, we expect price, to react at this particular level. So now your level might be a resistance or support, or it might be a supply and demand. So if you're a supply and demand trader, you will target your supply and demand levels. So if you're a support and resistance trader, you should be targeting your support and resistance level. So now this is my supply levels now, which are, identified. And if you don't know how to draw your levels, your key levels, I've done a video on that. You can go and watch it to know how to draw your level. So this is my first level, this is my second level that I'll be expecting the price to move to before taking my sell. But now, how do I know which of this level? That is what we are talking about now. The how to identify high probability trade setup. So how do I know which of these levels that the market will respect? Nobody actually knows that. But what you need to just do is, which will take us to the third key point, is for you to confirm that level, how strong it is. Remember, the number one is how to know your trend. Then number two is how to know your levels. And since we have been able to identify our levels, then how do we know which of those levels price will respect? That is why we are looking for high probability trade setup. This is a trade setup. This is another one here. How do we know which one has high probability between these two? You can use Fibonacci, to confirm the level. Since we've been able to identify this place as a supply level when the price was moving up, we expect the price to get to this place and sell. So how are we going to be sure that when price comes to this place, it will sell? So you can use your fee, to test that pick it from high to low. And if you look at that, this place is actually 61.8. And what are the fib level that you check? So if you don't know how to use Fibonacci, I've done a video on that. You can go and watch it. So how do you know which of these Fibonacci levels is important? So the most important Fibonacci level, they are 50%, 61.8, and 78.6. In fact, I recommend 61.8, which is here, and 78.6, which is here. Because if you want to follow premium and discounts, this is your premium. Premium start from here to here, while your discount start from here down to this place. And you only sell as premium while you buy at discount. So if you use this 50%, that means you are still not yet at premium. So 61.8 is already at premium, while 78.6 is also at premium. So I recommend 61.8 and 78.6. So now this particular supply is actually, in alignment with my fib levels. That means this make this level a good level to watch. Okay, it makes it a good level to watch. So that is the second thing that you can do. You need to confirm how strong that level is. Okay, and that will help you to be able to reconfirm what to do at that level. Then another thing that you need to now look out for is the higher the levels, the better it is. And what do I mean? If you want to know, apart from using Fibonacci to check, because using Fibonacci doesn't mean that price will respect the levels. So the higher the levels, when you are in an uptrend, the better. The higher the level of supply, the better the setup. Like this one, we have many minor supplies and we have major supplies. So this one is we have many supplies here now. This is one supply, this is another supply. So we have minor supply and we have major supply. So minor supply is not as strong as major supply. So the higher you go when you are in an uptrend, the higher your supplies are, the stronger and better they are. So that's how you identify high probability. So this supplies here is better than the one here. Okay, but that doesn't mean that when price gets here, price cannot drop. It can drop. And the same thing happens with demand. So price can drop when it comes here, but this is better than this. When you are trading these supplies, especially if it's not at discounts or if it's not confirmed with fee, you need to be careful. Okay, so when you are trading this, you need to be careful because well, if price has the ability to test all the supplies, it will test this. If it holds, it sell. If it does not, then it goes to the next level of supply to test. So that is why you need to consider the higher one, and the one that is in alignment with the Fibonacci. Okay, so now after you have known your trend direction, because it is very important that you know your trend direction. Sometimes you might see confirmations and good trade setups against the trend. Most times they are not always working. But when you see a good setup in the direction of the trend, they are mostly at least 95% of times they will work. But now, after you have identified your levels, okay, this is my minor level, this is my major level. Okay, what next do you need to do for you to be able to get an high probability trade setup? So when you get to that level, you need to watch the reaction of the price. What will price do at that level? Not that the price will get to the level and then you click sell or buy. No, it doesn't work that way. You need to now do what? You need to now watch the price, what the price is going to do at that level. And I was watching when I was actually watching this particular setup on GBP USD. This is a GBP USD currency PS, and I'm on daily time frame now. So I was watching this particular level when the price was coming here, but when I saw this particular candle, the pressure on this particular candle shows has given me a signal that this particular level might not hold, because there is no rejection at a level. There are certain things, reaction that you're going to watch. And what are those things? You watch the candle formation, you watch patterns, and you watch reaction of candles, whether the price will be rejected at that place or break. Those are the things you watch. But here on seeing this candle, the pressure, the volume on this candle is high. So I know that this particular level might not hold, and that is why I didn't put my money. But if you don't know how to identify high probability setup, because you are on this particular level now, you might just go and put your money. But seeing this alone, I know something is wrong at this level. And when I see this particular next candle, the way it closes, then I know this level will not hold. Then I begin to watch this particular one, because the moment one level did not hold, the price will move to the next level to test. So if it tests the next level and it holds, the price will fall. So when this one fails to hold, it goes to the next one. And remember, I said the higher it is in an uptrend, the better. The lower it is in the downtrend, the better. Okay, so when I saw this, when it moved to this place, then I begin to watch. And when the price gets to this place with this full candle body as well, I was still watching. At this level, you cannot do anything. Then the price drop again. And you can see that this price is chubby here. Why? At this point, a lot of people have closed their position because they expect the price to drop from this place. And that is why you are not really seeing buying pressure here, because majority of people have closed their position here and in anticipation for sell. But because price is not holding, that's why you see that this place is chubby. Then when the price gets to the next level of supply, you can see that there is a rejection. So when I saw this rejection here, this one is an indication that something might happen from here. Then this next candle, what happened? It could not go up again. Since it could not go up and close bearish, that's why the next one you can see that the next candle drops. But at this point, I must not deceive you. I couldn't take any trade from this place, because yes, this price look that it has been rejected from here, but we still have a support here. This supply here have turned to support, or this particular resistance, so if you want to call it resistance, it has turned to support here. So we need to break below this particular level before we can begin to sell. So that's why I could not take any trade from here. So now that the price has broken below with this particular candle, then this is where we can now begin to look for our sell, and I'm on a live chart right now. So at this, since the price has broken below this particular place now, this is where you can now, so this most likely this particular level we hold now. So we can now begin to look for our sell opportunities from here. So that is how you get your high probability trade setup. So now another thing, which is the final thing that I'm going to talk about, is risk reward. So after you have seen the reaction of the price at a level, then you have, and also you've seen the confirmation that the price will buy or sell at a level. Since you are looking for sell opportunity at this level now, okay, now we need to look for confirmation. Now, after, if you have seen the confirmation now, then another thing we now need to look at is risk reward, which is the final point I'm going to make. Risk reward. Now, if you look at this particular trade right now, if you want to sell from here now, what you do is you sell from here like this. Your stop loss will be somewhere around here or here, but I'll put it here. Then you look at the reward. This trade have the tendency of coming down to this place. You can see that this is a great trade setup. You know, it is a good opportunity. So this, if this price move from here, because the price has broken this place once, it has a tendency of breaking it again. And this is the next target that I'll be looking at. So this is a great opportunity. So this setup is good if you are watching it, but it doesn't mean that the price will move down to this place straight away. No, price doesn't move that way. When the price gets to this place, it's going to react. When it gets to this place, is going to react. Then if he's able to break this, there is nobody guaranteed that the price will break this particular level. So when the price gets to this level again, since there was a level, then you need to watch. So you see that when you get to this place, you close part of your position. Also here you close part of your position. Then you watch if the price, what the price will do here. If the price breaks, then we are coming down to this particular place. But if the price fails to break at this level, then we might return from here and continue upward. So those are the ways, that the things that you need to watch out for before you can get a good high probability setups. And